Bobby, do you collect things?
I do.
What do you collect?
Have to think about that. I collect some art.
Art is a fine collection, and maybe we'll talk about that a little bit.
You collect mugs.
I'm not trying. Not anymore. I have too many, and Marie Kondo, who we talked about the other day, would be angry with how big this collection's gotten. So I'm trying to stop. But I collect board games. I do that. And I don't really want to collect them. But I went to an estate sale the other day as we're furnishing the new house here in Detroit. And we've gone to a lot of estate sales. And I see these collections, these absolutely horrible collections. And these things are just dumpster fire collections. Like, they're great for you, but I went to this estate sale last Saturday, and this person who lived in this house had been collecting bells, and they had tables and tables and tables of little bells. And all I could think of was, what are these things actually worth, and who the heck is going to buy them? Live from my mom's half-finished basement in Detroit, Michigan, and from somewhere above Manhattan. I'm Joe Saul-Sehy, and this is my partner in crime. Partner in crime's not the right word. Partner on this podcast,
Partner in podcasting greatness.
There it is. Bobby Rebell is here.
Hey, everyone. Good morning.
Welcome to the show we call Money in the Morning. This is the show where we go over not one, but two headlines ripped from the financial press. And as if that's not enough, we actually talk about them with a live Facebook audience. And then we put them together into something we call the big idea that you can go home with and use your entire day. Money in the Morning is brought to you by Tiller, your financial life in a spreadsheet. Automatically updated each day. Manage your money 10 times faster in a spreadsheet with Tiller, the only service that connects your banks to Google Sheets and Excel with your daily spending, transactions, and balances. I use Tiller myself. It's a fantastic way to track your expenses and manage your budget. We'll talk about that a little more in the show. But right now, Bobby, we're going to talk about collectibles. Does that sound like fun?
Yes, it does. I'm limited here in New York City, but let's go for it.
Well, here we go. Laura, let's get the show started.
Good morning. You supply the coffee. We'll bring the headlines. Here they come.
Laura says here they come, so I guess we got to have headlines now, don't we?
I know. I'm waiting for my coffee. I have no coffee this morning. You have a mug with no coffee in it. Laura, come on.
Laura's like, we're going to take a break while Bobby and Joe get coffee. That would be better. I would appreciate that. But if we didn't do this live, we could have gotten coffee. But
we could have.
No. But you know what? These are some high-octane headlines we have today. Yeah. This first one comes to us from Sci-Fi Wire. I love the broad range of places, Bobby, where we get headlines. And this
We're everywhere, Joe.
This totally is. This is written by Adam Pockross. New study finds that Lego sets, you collect Legos? Lego sets may be a better investment than gold. You were talking to your husband about Lego sets.
Yeah, his immediate reaction was they're not liquid. He's very serious, but that was his gut reaction to it. You know, we have a lot of Legos in our house. Around my son's room, we have a lot of these different I don't even know what you call them, the spaceships, I guess, from Star Wars that are decorating my son's room that my husband built with him and my stepson. So we definitely have them. Apparently they're pretty much worthless though, because they're not in the box.
Isn't that wild?
It's not that simple.
Yeah, we'll talk about that a little more here in a second. Let's dive into the piece. Anyone who's ever shelled out some 800 credits for Lego's Star Wars Ultimate Collector's Millennium Falcon knows that the building bricks are worth more than their plastic weight, but who knew they were worth more than gold? According to a recent study by Victoria Dumraskaya, an assistant professor at Russia's Higher School of Economics, who looked at her son's Lego collection and thought maybe she had an investment already. From 1987 to 2015, Lego sets bested not just gold returns on investment, but also large stocks and bonds to the tune of 11% per year. In a paper titled Lego, the Toy of Smart Investors, Debrinskaya and student Julia Kishilova looked at the initial offering price of some 2,300 sets offered by Lego in that time frame, and then compared the price return with sales on secondary markets like eBay. And apparently, though the Falcon was recently offered as Lego's highest price set, big ticket items aren't necessarily the best way to invest in the toy sets. In a trend similar to the Fama French three-factor model, which very basically posits that investing in smaller companies yields bigger returns, smaller Lego kits show more growth than larger ones. The beta of the size factor is statistically significant, and the dynamics of the Lego index we created for our research is similar to that of the size factor, Dembrotskaya told Bloomberg. Lego sets don't show a significant correlation to the financial crisis and can be seen as an attractive investment with the diversification potential. In one case, they even found that a whopping 613% return on investment on a kit for Star Wars Darth Raven. I think I mispronounced. It's Revan. And you know, Bobby knows zero about Star Wars. I think your son is bringing you up to speed right now.
He is. We're actually, that's our reading every night, is reading about rereading the Star Wars books.
I know some,
because he's frustrated that I don't know all the intricacies of the Star Wars. There were 9 Star Wars movies, and I think they're just making random ancillary ones now too. He's not happy with the quality of the most recent ones, though.
I can see the disgust. Come on, Mom. You got to know. Come on, Mom.
Yep.
But Darth Raven, I don't know. The Revan that retailed for $3.99. That's $3.99 in 2014. Then sold for $28.46 on eBay the following year. That's not playing around. Now, it says, before you start buying even more Lego sets, keep in mind there's as much certainty in this study as there is in the rest of the investment market, so buyer beware. But at least if you can't sell a Lego set, you can still play with it. Let's dive into that. I think that was the lesson in the Lego movie, was that the true return on Lego is playing with it. And these adults that want to put it in a box in the corner are kind of missing the point. But look, you know, I mean, Legos, what do you think about investing in Legos instead of gold or stocks?
I'm going to give this a hard time. I get her stats, but first of all, she's comparing, I assume, perfectly unopened boxes that are for sale that were bought for that purpose and then monitored and sold. We're not seeing all the #fails, as they say. I mean, you can buy a Lego set thinking it's going to go up in value, and it may, but then again, you don't control the supply and demand at all. I mean, first of all, demand obviously can go down with the economy because it's generally a discretionary purchase to buy a collectible like this. But what strikes me more is you really don't control the supply at all. And Lego could decide to reissue the same one to make more of something than you anticipate and so on. And that devalues your investment and you have no control over it.
We've seen crazes like this before. I mean, baseball cards, right? Mm-hmm. And stamps, exactly. Coins. I mean, well, coins are a little bit different. I mean, coins throughout the ages.
There's real value very often.
Continue doing different things. But what's interesting is, I want to bring up a few points here. I was just listening to a podcast talking about collectibles, and I know that we've had discussions in our Stacking Benjamins Facebook group about art because of an advertiser on the Stacking Benjamins podcast recommending crowdfunding art. And they talked about this idea of the illiquidity premium and the fact that when an investment is illiquid, like art is, or even Lego, where you got to take it to eBay and find a buyer. And how long does that process take, right?
Right. There might not be a buyer at that moment, and you are stuck with it until there is a buyer.
Right. Which means that potentially that makes the amount of money you make can go up. However, the illiquidity you have to take into account. Like, you know, if you invest in Beanie Babies right now, you're not going to get the return that the fad was. But if Lego's been around though long enough where we can consider this not a fad anymore.
I don't think it's a fad. As a parent, I do think that this is something that will continue for generations, but collecting it, you know, again, this company is doing very well and they can just make more. So there's not really a limited supply. They may make some limited edition things and those may have value. And if you're not buying that to play with them. And you're taking that box, you're putting it somewhere where it's saved very safely. And in fact, I did pull up some research on what what you can do if you are going to buy it for the purpose of investing. And this came largely, I want to just credit, it's a guy named Jeff, I'm going to totally mispronounce his name, Maciorowski from Brick Picker. But he had tips that if you are going to buy it as an investment, you have to really treat it as an investment. You can't open it like we did and put it all together. So first of all, as with many collectibles, it has to be unopened. You can't even have creases in the corners. You have to watch how you store it. What he says is also another tip if you're going to buy Legos with the intent of investing in them and getting a return is that you should buy retail and sell secondhand. So he gives an example of Millennial Falcon. I think retail, this is crazy prices, $499.99 in 2007. Now it's selling for up to $7,000, but you have to have that and you have to have bought that and you have to have kept it in perfect condition. So remember that. He also says movie sets, speaking of Star Wars, are going to get the best returns. What does not do well is if you buy a set that is kind of generic, like something a kid would play with that they kind of make all the time, like a firehouse or a police house. And he says, and this is a little bit in contrast to the study, that big sets actually do better. So those are things to think about.
But I'm also thinking, well, and especially if you're investing in movies, you also have to make a prediction of how big is that movie going to be.
But if it's big, maybe they'll make more.
Absolutely. Well, good point there too.
You don't know what the supply is going to be.
Yeah. Yeah.
Unless they come out and make a promise and say, okay, like with art, this is going to be a limited edition of, 500 or something. And they cap the number, but that doesn't happen a lot.
I like this idea that's come with some of the regulation changes where now, when I was a financial planner, dealing with collectibles was something we told people not to do because it was super expensive and because with like Legos, you don't know how you get it. But now with other things like art, which have a proven value over time, now these crowdfunding rules are letting the average person get in with a much smaller investment. The bad news is the illiquidity remains. Like if you buy a fraction of a Monet painting, it still is going to be illiquid. It's going to have to sell at an auction, and who knows what you're going to get for it on a certain day. I was at an auction on Saturday while we were going around to these estate sales. We also went to an auction, and there were 18 Moreaus being sold. And I love Moreau. I think I really like modern art, but these were lithographs, and they were being sold for. They estimated they were going to go between $35,000 and $50,000 each. And sitting there and watching these and thinking about the fact that there had been a snowstorm the day before. What if the Moreaus had been sold on a day that the snowstorm was happening? And instead of having this pack house of people that wanted to buy these Moreaus, there was almost nobody. I mean, maybe they wouldn't have gotten $35,000. So even with crowdfunding rules, it's interesting and difficult. I like it more than I used to, but I think our takeaway here, Bobby, probably is don't invest in the rearview mirror with collectibles. Like just because Legos, it says here that Legos have been hot. Who knows in the future? Where the S&P 500 is based on businesses. Like if you go buy an index, we kind of know that businesses are going to continue to exist. And like we said last week when we talked about buying different stocks, that the S&P 500 and these other indexes are also kind of self-cleaning. When a company is no longer any good, it gets rid of it, where a set of Legos sits in your closet for years and then it turns out it's worth nothing.
Right. Or something happens to them and it's worth nothing because you could have, I live in an apartment. You could have the neighbor above has some sort of leak. You can protect it and stuff. But then, the art that I do have, and it's not worth anything like what you said in those pieces were worth, but they're first of all, they're worth a lot in my heart, but they're worth enough that they are on my homeowner's insurance.
Yeah.
For that reason, I would be heartbroken if something happened to them, but you have to have insurance on these things, and that's an additional cost.
That's good advice there, though, because we see people do that all the time. They skimp on their homeowners by not having those separate endorsements.
You got to get a rider.
Yeah, those separate endorsements and riders on high-ticket items. Get those on expensive jewelry, expensive art. Have them appraised. I think that's...
And repeatedly appraised. One of mine, the guy, I bought it a long time ago, and the guy has become famous. And he's in museums now, and that I have to pay more because the value, which is a good thing because the value went up, but that happened. And so that was a lucky, I love the art, but I had to now go to the insurance company and go to them with a new appraisal.
I'm about to go to Facebook here and see what our friends who are with us live are talking about. But before we do that, I had something that was the opposite. You had something that was a nothing and then became very valuable. My brother,
medium valuable. I would say medium. It's not crazy valuable, but like it's enough that
whatever. It went the way you wanted it to go.
Yes. I'm never selling it, but yes.
My brother and I took a baseball that my dad had under glass with a bunch of fantastic New York Yankee signatures on it. And we took it out after the snow melted and thought if we just played a couple rounds of catch with it, that nothing bad could happen. And
oh my God. Did you see the Sandlot?
What was it?
You know that movie?
I do remember that
movie.
My God. Yes.
I cried at a lot of movies. Yeah. I cried at the Sandlot.
Great reference. People need to, we're not going to get into that. That's a whole different podcast, but go watch Sandlot. That's, I think, a good thing. Let's say hi to our friends hanging out with us here live on Facebook. If you want to hang out with us while we make a podcast, head to facebook.com/iStackBenjamins, and you can also comment. Kevin and Ryan and John and Lori are here with us. Rebecca's here. Bethany's here, the MC of FinCon, a conference that you and I both really love. Lori chimes in, though, and says, I'm not interested in having investments I have to dust. I think that's...
Do not create more housework. I fully support that.
Yeah, Marie Kondo would too.
Yeah.
Going back to Thursday's show. Ryan says, my ex's dad buys lots of Legos at yard sales. He sells them on a website in individual pieces. He has them all cataloged in little bins on a whole wall. He can make hundreds a month, but it takes some work to sort through them. I wonder what the ROI is.
Right. What's your hourly wage? You did a good story on that a while back about the hourly wage. I think it was driving for some company doing deliveries for something, and it didn't turn out to be all that much money.
A friend of ours, Chris, is here. We're going to out another friend of ours, Paz. Both these guys have been on the podcast on the Stacky Benjamin show. Chris has climbed Mount Everest twice, actually, and says, have you been spending time in Paz's basement? And the answer is, yes, I have. And that guy has lots of Legos that he doesn't let his kids play with. Not at all. It's very serious Lego collector. So Paz is a financial planner. He'd be incredibly happy to hear that they're actually doing what he hopes that they're doing. John chimes in with Jordans. I mean, people do this with tennis shoes. I'm sure you look at the old Jordans.
Yeah, Nikes. Yep.
Yeah. And then Lori says, oh, wow, Bobby, research is against the rules in the basement. Joe must have fallen down on the job, letting you come to the table. That's why we had to bring some credibility to the show. And that's why we needed a partner like Bobby. Somebody was going to do the research, and yeah, it wasn't going to be Mom or Doug. So there you go. Kimberly is with us. She says, my dad always tells me that back in my day, we didn't have the money to buy things and not use them. Well, but imagine not use them. But what if you, from the very beginning, though, Kimberly, thought it was an investment? You know what I mean? Like you went and, people buy gold bars and they put them under their bed. Imagine if you took Legos instead and put them under your bed. Historically worth more than gold. And that's it. Let's move on to our second piece, which comes to us. Where's our second piece come to us from? Oh, this government shutdown. Hopefully, when the audio version of this airs on Saturday, hopefully the government shutdown is over. But whether it has or not, this long shutdown, I think, has taught some people some very difficult lessons about money, and certainly lessons that we didn't want to have this way. So this comes to us from Market Watch. It's written by Alessandra Melito. And Alessandra writes, how furloughed federal workers can rebuild their finances after the shutdown. Sonny Blaylock is one of the thousands of furloughed workers whose life is on hold because of the partial government shutdown. The Arlington, Virginia resident is a federal contractor, and both she and her diplomat husband are missing paychecks while most of the government is closed. She intended to pay off student loans this month, but is going to have to delay that goal. She'll also have to cut back on saving for retirement and her children's college funds. And although this is a time when most D.C. area parents are arranging childcare for the summer, she hasn't yet. Quote, you can't afford to live here without two parents government's working, and so you have to book in January, and we haven't, she said. I could, but I just don't want to use our savings because I don't know how long we'll need to live off of savings. The 39-year-old mom of two who's currently who's currently out of work while her husband works without pay, said she's aware she's more fortunate than others in this situation. Unlike many Americans, she and her husband have some cash savings to draw on. The shutdown hit its 28th day on Friday, making it the longest government shutdown in U.S. history, and is the direct result of a debate between President Trump and Congress to fund the building over the funding of Trump's proposed border wall. Still, the shutdown's taken emotional and financial toll on her and her family. Health insurance deductibles have reset because of the new year, which means any sickness or health emergency would hit them hard monetarily. They're not going out or buying things and spending frugally on food. Her confidence is plummeted, and she thinks it'll take months to recover emotionally, she said. You don't plan on your government creating the emergency, she said. You think of a problem with a roof or someone gets hurt or sick, not that the government decided not to pay my husband and make it so that I'm unemployed. The shutdown could also have a ripple effect on workers' finances even after it ends. Missed payments for credit card or mortgages are eventually reported to credit bureaus, which could result in as much as a 90 to 110-point drop on a FICO score of 780 or higher, according to credit.com. The piece goes on, Bobby, to talk about don't splurge, pay off your debts by all means, but do so rationally. Reflect on how you survive this period of frugality, like go through the best lessons you learned about frugality, what was important and what doesn't, and add that to your daily life. I like those, and I'll link to those on my Twitter feed. But what do you think? Getting into the details here a little bit.
Yeah, well, first of all, my heart goes out to all of them. My mom worked actually for the government. I don't think you knew that. She was a lawyer for the government. She advocated for people that had mental health issues and needed benefits. And she always said that one thing she liked about her job, even though it didn't pay as well as other jobs, is that it was steady and it was reliable. And she knew she had that rock solid job, and this never happened to her. And she's not with us anymore, but I do wonder, the reality of all these families that are dealing with this. We can live in this bubble world where everyone has the perfect emergency fund, but maybe you've depleted your emergency fund because one half of your breadwinners in the family are unemployed, as is the case in this story. And so this is just very difficult. I think a lot of companies have really stepped up and are offering people as much help as they can in terms of maybe moving the dates that bills are due and such, but not everyone can, because it's a domino effect, because if you give somebody an extension, then you can't pay your bill. So it's tough. The credit score thing really hits hard because rates have been going up. And if you are in the market to buy a home, well, now maybe that home could be more expensive. And then that hurts the home market, which is also suffering. So the broader implications here are heartbreaking.
I want to go to the comments here a little early because Lori has a really good one. She said, this shutdown's startling as it exposes how many people have really good jobs still live paycheck to paycheck. And this is a very difficult lesson. When I was a financial planner, people equated high cash flow with being able to survive an emergency. And when that cash flow gets cut off, everything changes, and it changes so much faster than you think that it's going to. So until you have a sustainable supply of income from other places, having that emergency fund is absolutely huge. I thought that's a great point, Lori, that cash flow does not equal security.
Yeah.
Assets equal security.
I also think, in a perfect world, everyone would have the emergency fund that they need for whatever you define it as, 6 months to 9 months. If you don't have that saved and you are working, one thing you can do, and again, not ideal, but better than rolling out the credit cards, is to take out something like a home equity line of credit where you don't borrow anything, but it's there, because when you're in the emergency time, they're not going to give you that line of credit. But if you have it, again, not ideal, but let's say you were in the situation, at least it is there as a buffer. If you are working to build up your emergency fund, because there is that time frame when you're building it up, or maybe it's been used because one of you lost your job and you have been using the emergency fund already. That happens. Sometimes emergency funds get used and you're in a phase where it's not there. So I am a big advocate of having other options, just like having multiple income streams, have multiple options if you're in a cash crunch.
I want to get back to the multiple income streams thing, because I think this is another lesson too. This is a fantastic reason to start a side hustle. But before we do that, to your point about having a line of credit open, home equity line of credit, whatever it might be, we in financial planning, we talk about about it like an ice cream cone. And you'd have your most liquid reserve on the bottom. That's the part that starts dripping first from your cone, and so you're not worried about interest. You're worried about liquidity. That money might sit at a savings account at your bank. It's someplace you can get to very quickly. You don't want to leave a ton of money there, especially if you're a spender like I am. So you put money in a second tier for two reasons. A, so it's a little less liquid. Maybe you have to make a phone call. Maybe it's going to take a couple days to make it liquid. Sure, that's going to give you a short-term hardship, but still in a day or two, you've got your money. But on the other side, now you can maybe secure some higher interest rates. So in other timeframes, don't want to do this today, but like a CD ladder is a nice thing. But now some high interest savings accounts, some money markets paying, we're getting up into the 3% range now. Woohoo! Yeah. With some of those. So put some of that money, but then after you've got your bottom tier, the bottom of the ice cream cone, and then the top part, which you melt through then you've got the scoop on top. And that was your line of credit. What lines can we have open so that if things go poorly, I've got some more money that I can get to? Because, who wants to loan money to somebody that has no income coming in?
Exactly. You're not going to get that. And then you're going to be on the credit cards.
The good news here, I will say this, I just learned this in the last few days. Some companies like USAA, Navy Federal, PenFed, people that support a lot of government military workers, people that are affected by this, those companies are offering some very, very low-cost loans. That certainly going into debt is not something that you want to do. You want to pay this back right away. But if you're somebody affected, I would look at some of these companies that work with a lot of federal employees during this period.
I wonder if they're going to help the people that are affected indirectly, like the people that maybe serve lunch to the workers and things like that. Maybe people that provide transportation to the workers, all those things that they are not using.
There's these whole other ancillary industries that are going to be affected that are going to have nothing. Yeah, you're right.
Exactly. And people will, those workers will get in, I believe that the furloughed government workers do get they will get the money eventually paid for the work that they have done. But those other people, I don't think it ever gets made up.
Let's talk about this idea of side hustles, though, because, we talk about multiple streams of income in finance a lot. And I've been an advocate for spend more time on your main job, because people don't ask for raises. They don't, in a lot of jobs, like when I was a financial planner, it was a blue sky job. If I served more clients, I could make more money. But this is a case right here for if you're working for somebody else, developing another stream of income that you can go to in your time of need.
Yeah, you never would have thought the government would be that place, but absolutely. And it is a tricky thing that you point out, because I think that we are going to start to see a little bit of a side hustle backlash, because when you're hustling around and maybe you're in multiple jobs, not by choice, in what's become this gig economy, as especially the millennials grow up, I think there will be a bigger appreciation for actually, as you say, paying attention to your primary job, but at the same time, kind of always having one toe in the water somewhere else, just in case. But side hustles, you have to have a purpose. Are they for extra money temporarily to pay off some situation like student debt, or raise money for a house down payment? Is there a short-term financial purpose? Is it a hobby side hustle where it's not really for money, but you just enjoy it? Or is it something where you're trying to off-ramp eventually from your primary job? And that is the purpose. But if it doesn't have a purpose like that, you have to really think about it, because you do drop balls in your main career if you're not focused, and people catch on. People know.
Right.
You're not totally there, that you're not present, as they say.
Right. You're spending half your time thinking about photography on the side or whatever.
Well, look, I wrote my book, How to Be a Financial Grown-Up, while working full-time at Reuters, and they were onto it. And I did eventually, it was an off-ramp, of course, but it was not something that I could hide. And it did take away from my focus. And I don't think that would have been sustainable indefinitely.
Let's head back here at the end before we get to the big idea and really the takeaway from this to our friends hanging out with us on Facebook. Kathy really likes your idea of having the line of credit. I do too. There's going to be a yearly fee sometimes for that, but I think it's worth whatever the minimal fee is to have that available when you need it. Rebecca, I think, nails what our big takeaway was. Our takeaway was going to be start with an emergency fund. Rebecca says highlights how much an emergency fund you need. Absolutely. I totally agree with that. And Kevin says my ice cream cone analogy is a brilliant analogy. And I think we should leave it there, Bobby, because if anybody calls me brilliant, that should be what we leave on the screen for the rest of the show.
Ice cream.
And ice cream. Yeah, good point. I want to talk about the big idea here. Bobby and I have a fantastic big idea to send you home with. But before we do that, we talked a lot about your budget, and we talked about side hustles. We talked about managing your money. What does all that have to do with our sponsor today? Well, a ton, because today's show is brought to you by Tiller. Tiller is your financial life in spreadsheets automatically updated every day. So here's how it works. You can choose whether you use Google Sheets or you use Excel. And I know there's a certain number of people either watching or listening that are going, you know what, spreadsheet, lost me, I'm gone, pal. The cool thing is, because I like pressing the easy button as much as the next person, it comes with templates, and you can choose from any of a myriad of templates that Tiller's already laid out for you. They've partnered with some of the great minds in finance to create some templates. So decide which one works for you. And then the neat thing is, let's say it doesn't work for you 100%. Because it's a spreadsheet, you can customize it. So you can take out the stuff you don't like, add in more. Mom likes seeing lots of charts and graphs. I just like it very, very simple. I move fairly quickly, so I just want to know the bottom line. But the cool thing is, not only is it a spreadsheet, you hit the easy button and immediately everything updates every day to your spreadsheet. And spreadsheets don't usually do that, but Tiller does. Check it out using our link, stackingbenjamins.com/Tiller. That's Tiller to kick the tires today. And if you end up using it, by the way, if you use our link, that's how we keep podcasting, is we have an affiliate relationship with them, and they send us a thank you for sending you their way. So thanks to everybody who's used our link if you're going to check out Tiller. All right, Bobby, time for the big idea.
The big idea.
I think the big idea on this one is, there's some people that will read a headline about Legos and they'll think, that sounds really sexy. That sounds awesome. I should get involved with this because it's an exciting way to invest money. And even though it's exciting, you and I went over just a ton of risk. Like, there are so many risks out there that for me, the S&P 500 probably is still a more boring way, but an easier way to invest money.
Yes, although it can be quite exciting when it goes up.
That's right. Yeah, as you see the bottom line.
If you do obsessively watch it.
It can be exciting too. But we also think that we need to make a bunch of financial moves, right? That we need to get involved in exciting stuff.
Less is more.
I remember when I was in my early 20s, I thought that exciting equaled better. And so I didn't build an emergency fund. And I've talked before about some horrible things I did with money early on and this year without income. Oh, I was horrible. And I had to learn things the hard way. So part of what I like about this show is I get to kind of make mistakes so that you don't have to. And a mistake that I made a long time ago was that I thought that boring was bad. And you know what? Starting with an emergency fund, which sounds really boring, and paying debt off and not getting into debt in the first place is a great thing. And maybe avoiding Legos and going instead with...
Or just buy the Legos for your kid to play with.
Well, good point.
How about that?
Invest in Legos for your kid. Maybe invest in more liquid securities at the bottom of the pyramid. And then later, if you want to have fun, listen, we're not saying don't ever invest in Legos. I mean, if you're excited by that, do it. But I don't think you build your portfolio around that, Bobby.
No. You're one play date with the kid coming over and opening that box away from losing it all.
I think that, we're one baseball throw away from that investment going bad. Hey, thanks to everybody who hung out with us today on Facebook. Thanks to everyone who listened to the show, who's left us a review of the show so other people know what they're getting into when they listen to Money in the Morning. Bobby, thanks a ton to you for bringing the research.
Thanks, Joe. Thanks for bringing the fun.
Deal.
The laughter, Joe. The laughter.
We'll see all you next time back here at Money in the Morning.
Money in the the Morning is created by Joe Saul-Sehy and comes to your ears because of the collective genius of our producer, Richie Rutter-Reese, engineer, Caden Thompson, and a pack of very well-trained ferrets here in the basement. You'll find links to all of our headlines featured on today's show in Joe's Twitter feed at @AverageJoeMoney. I know you already know this too, but Money in the Morning is for entertainment purposes only. You shouldn't act on anything recommended by a bunch of entertainers in a basement without first consulting with your financial advisor and second, having your head examined. Have a headline you'd like us to discuss? Send them to Joe at stackingbenjamins.com or put them on our Stacking Benjamins Basement closed Facebook group. This show is copyright 2018 Stacking Benjamins LLC, all rights reserved. I'm Joe's mom's neighbor Doug, and I reserve the right to always say, we'll see you next time back here on Money in the Morning.